Hey guys, Mike here. So got another loaded video for you, and we're going to go into certain things that are going to be coming up because we're getting ready to go into June after this week has ended. Okay, and so we need to look at that. Also, some things that happen on Friday, very critical, especially on the S&P and the QQQ, because they are differing a little here. And then something, I'm going to show you a small little snippet of a members video I put out last week, but it's something I want you just to be aware of. It's up to you to be aware of it. That's fine. If you're one of those people that just likes to get caught off guard and go, what happened? I don't understand why my portfolio is down 20%. Then don't pay attention to it. But I'm just telling you, there's certain things that tend to always happen. It could take weeks, it could take months, but it always happens. Kind of goes in almost like a line of things that you have to check off, right? And so I'm going to show you some of that right there so you can be watching out for it. It's very, very easy to track it, okay? Very easy to track it. You don't have to have a paid service or anything to do it, okay? And of course, I'm going to be tracking it for you anyway. But certain things that are going to be happening, obviously, we had a melt up, just grind it up on Friday, right? Which I'll show you why as well on that one. But certain things you got to understand, no matter how bearish things get, and you could have a pullback or whatever it is, but the market knows this, okay? Liquidity is king. What's going to start be happening here on May 29th? Treasury is going to start buying back bonds, okay? The weekly buybacks will be up to around $2 billion, all right? So we'll see what that does for it. Also, so the bond market knows that, right? What else in June? All of a sudden, here comes the Federal Reserve. We're not going to roll off $60 billion. We're going to roll off $25 billion per month off these bonds, okay? So that's going to help the bond market out. They know this, okay? That's why you see HYG, right? This is the riskiest bonds you can pretty much get, okay? High yield bonds, junk bonds, okay? And it's holding up rather well, a lot better than most people would think it should, right? And I would say a key level to watch around between 75, 76, somewhere in there. Watch that level. If that breaks, obviously that's a whole different story. But if you see this thing start going down, like you do to the left right there, that is not a good thing. Remember, for those who are new, HYG, RJ, and K, same thing. Go in unison with the S&P 99% of the time, okay? And then when it breaks, that's when you need to start watching, going, okay, there's divergence here some which way or another. And so that's what you got to watch out for, which means, of course, I'm going to be watching out for it. But again, you see in right now, it's kind of going sideways, right? While the S&P is actually going up, all right? And so it's just another thing to watch out for. But the bond market knows that the government's going to be backstopping this thing, okay? There's a reason why they're working in unison on that. They're trying to stay off anything bad from happening with these rates being as high as they are. I will say this, not that seasonality has worked out so far, but June is one of the worst months of the year for the stock market. September is by far probably the worst, but June's never been historically a great month. Usually in May, of course, you say, well, May ain't very good either, and it's been a pretty good May so far. So we'll see if it works out. I'm just letting you know. Now, what I told members on Friday during the news brief, I said, and look, it's a holiday weekend. A lot of people don't like to hold, and a lot of people don't even do anything on Fridays during a holiday weekend like this, but if it's a low volume day, which we expect, that means traders can push this market around a lot easier, okay, whether it be up or down, okay? And I want to show you the volume. It was definitely a low volume day. This is the volume on the S&P. I'm going to try to draw a line here. We'll put a trend line across so you can kind of see like where the volume is compared to the other days here, going back about a week. But you can clearly see, right? I mean, I think that's a fair line, that the volume was much lower on Friday, okay? I mean, even when we try to zoom in here, and I try to like make sure plenty of things have touch points, but as soon as 9:30 opened up, the volume started drying up, right? And so again, this is like 2:30, I think I'm recording this or whatever it is, trying to get this out to you, but clearly you can see when you go back and look at the other days, the volume is lower. And when it's lower, as long as the majority of the herd wants to go in one direction, that's the way it's going to go. And Friday, what you see, it just kept grinding and grinding and grinding and grinding, right? And so, again, that's what happened. If you want to, I don't understand what happened. And, of course, what else did you have? You had a huge engulfing candle we had talked about. And when we look back in the past, if you remember Thursday night, if you watch that, what do we say happens sometimes? You get these engulfing candles somewhere at the top. It can signal a reversal. It doesn't have to. But don't be surprised, like right here, big engulfing candle. If you see green days, what was the next day? Nice green candle. What was the day after that? Green candle, right? Go back and we'll find another one here. Let's see, here's a nice big engulfing candle. What was the next 2 days? Green. Now, of course, both of them in reverse and sold off, but still, that happens, okay? So that's why it's no big surprise there. And on a low volume day, right? Holiday weekend. So what didn't happen? Again, we talked about that middle trend line being broken and a weekly candle above it, that did not happen. So the question is this going to start to roll over, head to the bottom? The key level to watch out for, just mark 5,200 on your charts. That's the key level to really watch there. If it does go down, and again, pullbacks are normal in the market, and that would probably be if we measured out somewhere between probably 2.5% to 3%, somewhere in that range. For sure, and we'll measure from the top of that candle right there. That would get us to the bottom of the channel and coincide with 5,200, which would be a good bounce point. If it breaks that, breaks out of the channel, breaks 5,200, then we got something to talk about. I mean, then things get really, really interesting. But, if we look at the Qs, what happened here? We got a weekly close above the midline. What has been leading the market? Tech, especially semiconductors, the Mag 6, 7, whatever you want to call them. And so will it be this? Will we continue this move up? Once you get past that midline, will it ignite an even bigger rally? Okay, going up. That's what we got to figure out. Or is the S&P, which really is the market, getting weighed down by a lot of the sectors the Qs don't have to worry about, of course. Is that what's going to be pulls the Qs down as well on top of it? Because NVIDIA obviously has had a huge run up. Semis have had a huge run up, even though they got a nice sell off on Thursday. Some other stocks are just sitting at nosebleed like levels. And so we'll see if the market wants to buy them down cheaper. But again, right now the SPY has been just lagging the Qs. I mean, you can see it plain as day when we start to zoom out on this thing. Let's go over the last like 5 days, right? And you can see, I mean, SPY over the last 5 days is basically flat, and the Qs are up 1.5%. Okay, so what's happening? Big tech is happening, right? And then the S&P is getting weighed down by a lot of other sectors, which we're going to go into one that's dragging it down. And so just kind of keep that in mind. Now, the bigger thing we also got to look at too is always the breadth, right? Is it just going to be these big stocks pulling us up, or we're going to get concentrated again? Is that what's going to happen, right? Even though Apple's getting way up there, and Amazon, these other stocks, Google, getting way up there in price, right? But you can see it's obviously it's not the breadth and as good as it was. Okay, you can see right there, plain as day on the 5-day. You got the RSP is negative 1.2%. QQW is 0.5% up. So the Qs are heavily outperforming it. The SPY, of course, you see is negative over the last 5 days, but nowhere near as bad as the equal weight ETF. Now, when you go back a month, you can see the equal weights were doing a little bit better right there, as you can see. But again, it's big tech, so it's pulling us up, right? We're getting heavily concentrated once again into semiconductors. I mean, the hedge fund like exposure is just unbelievable in semiconductors right now. I think it's at like a record level, which you would expect. Now, IWM is just a mess. Okay, it really is a mess when you look at this. And we pull up the arrows. You can see the good thing about falling down. What do? You fill a whole bunch of RTH gaps, right? I mean, so filled a bunch of gaps, and we got one more to go. Where's the line at? 200. Is it going to be that easy? Do we sell back down to 200? That's where you get that last gap fill and bounce. That's what we got to find out. Keep that level on there. But where do we reject that? The 2023 high. Mark that out, the 2023 high, okay? And there's a 2024 high above. And so, again, they left another RTH gap. So if it does start to sell off back down to 200, maybe it can fill those two gaps before it gets a good bounce. That would be nice. But again, when we start pulling up stuff like the daily right here, you can see there is a high over there. There is a low, and that is a lower high, right, on a higher time frame. So the question is, are we going to get a higher low or a lower low? That's the question, okay? Now, of course, what's the bounce for? Oversold on the smaller time frames, nowhere near on the daily. Okay, so we'll see. And what this is going to depend on if it moves up or down is going to be this 10-year. All right, if this thing looks like, in a way, it's not a double top exactly, but equal highs there. And then when you look at lower time frames and you're looking at like the RSI, you can see there's some bearish divergence there, right? And again, a lot of people look at the hourly or 2 hourly. I mean, you look at the daily, which we'll look at right here, and it's just equal highs on both, right? So it's kind of like indecision. Are we going to go higher, lower? If it starts to go down, guess what? Small caps are going to love it. They're probably going to recover. If it continues to ramp up and go up, small caps are probably going down to 200, and that's where it needs to hold for sure, all right? Now, what to watch out for? I want you to look at these sectors here. There's something you should start to notice. Obviously, XOK is number one. XLU's crushing it, right? Communications are crushing it. And this is just over May. But what do you see at the bottom, right? There's XLE and XLY. That's the stuff you don't need. That's consumer discretionary, all right? We go back over here. We'll say year to date. Consumer discretionary at the bottom once again. We go 1 year out. you can see consumer discretionary was doing pretty darn good. It was up there at number 3. But as if we reeled it in and going 3 months and 1 month and 5 days, so basically 2024, right? People have started to get more selective. This is the stuff you don't need. XLP is consumer staples. That's stuff you do need, right? So as this consumer discretionary has worked its way down the list, consumer staples has worked its way up the list. And so again, you can look at this ratio right here. This XLY divided by XLP. If it's going up, XLY is doing much better. That's the stuff we don't need, right? If it's going down, which is usually what you see in a recession, or if they think we're going to have a recession, you'll see it go down, this ratio going down, right? And usually for every recession, this is what happens. Because people are like, nope, don't need the stuff I don't need. They start cutting back and all that good stuff, which you're going to see in this video. I'm fixing to show you a little snippet of it. And so that's a good ratio to have. What are we doing now? It's going down, but it's just started, right? So if this continues to go down, it is basically alarm bells, right? That's what this is alarm bells going, wake up, wake up, wake up. All right, so, and again, this will align with other things, which I will talk about along the way and stuff. But when you look at this, snippet of this members video, you're seeing this theme, right? When it comes to what? Very expensive stuff. And so check this out. Basically, one thing you're seeing, if you hadn't noticed, is a theme of luxury brands actually, crashing, getting just punished and all that good stuff, and warning after warning after warning on these earnings calls. So we're going to go through that because that's one of the things I'm looking at, also something else to watch out for. And if you don't know what I'm talking about, you can look at like Lululemon, right? I think they sell, I'm being sarcastic, what was it, like $300 pair of warm-up pants or something, which is insane to me. They're going to be reporting on next week, I believe, at the end of next week. And, you can see, they've been pretty much crushed at this point in time. They're coming into a major level of support and stuff, so it would make sense they would get a bounce. And again, it's one of the ones I already warned about, slowing down. Here's Estee Lauder's another one, right? Lowered its revenue guidance, not just because of America, but of course of China as well. And so, there's Estee Lauder. That chart looks horrible, right? That company's been struggling. You realize Americans are just choosing cheaper alternatives. Really is what's happening, right? RH, formerly known as Restoration Hardware, right? For a decline in revenue of the fourth quarter. And then, of course, it gives a warning saying, how's the market hurting? They're hurting, right? Things are slowed down. Boom. Obviously, and you can see that's just a mess right there. And so there they are. You see Burberry, which I actually never heard of, but it's a global luxury brand and everything. Says China and U.S. demand slowing down. Look at that chart. Oh, just absolutely destroyed, right? That thing's down massive, okay? Tommy Hilfiger, PVH is the stock, of course, tumbles 24% on sales warning, right? That was in April. And then you go through March 24, even Nike, right? I don't consider Nike being a luxury brand, but guess what? Those shoes are expensive, man. Like, I've never owned a pair of Nike since I was 16 years old, and I refused to pay the price for it. And you can see, what are they talking about? Sluggish sales in China, cautious consumer behavior, slowing segments in Europe, Middle East, and Africa. Soft demand outside the holiday events, all that fun stuff, right? And they broke down past a major trend line, which goes, and I believe this is logarithmic, but it goes all the way back to 1990, I believe it is. And so, boom, they broke down below that, hadn't been able to get it back above it. It's basically kind of this wedge pattern right here. So you would expect to bounce if you didn't notice on those charts, like Lululemon, a whole bunch of Nike, everything else. Like they're, a bunch of them reporting this week coming up, and they're sitting at these major support levels, right? So Ulta's another one of these. They're sitting at major support. Just look at it. So you would think either that whole area, the whole sector is going to get this big bounce up, and you're going to get this turn, or you're going to get an even bigger move down. Okay, so that's something to think about, right? And so that's something to watch this week. And I'm just putting it on your radar again, making my list, checking it twice, watching out for it, so I'm not surprised. Okay, if something does hit the fan. So that's the thing you guys are looking for: liquidity, any kind of sectors that should be going up or coming down, right? And those are the sectors you see go down before maybe a recession or a market turn down, like you saw in 2022. Remember, they thought there was going to be a recession. There was not. Okay. And so, but these are the sectors they will push down first, like transportations, right? Expensive stuff. We start opting out of that. Ask people, and you guys gave me feedback about the makeup stuff. A lot of women said, nope, don't cut back on makeup, but we'll go to a cheaper alternative if it's just as good, right? And so, that's why you see e.l.f. going to the moon, because it's a cheaper brand, especially popular with the younger people. But again, Walmart even talked about how their makeup brand stuff is doing better because people are going there and they say it's fine, lipstick or whatever. And so they can still get some brands there they like for cheaper. And so that's what you kind of see happening. And that's what leads into a recession. When people start cutting back on spending, that's why I ask these things. That's what leads us into a recession. All right. And so especially like the people who max out their credit cards every month, who are physically irresponsible, that's what keeps the economy going. Not the people that are physically responsible, right? When those people start cutting back because they've maxed out their credit cards or something, or just say, man, we're totally broke here, we ain't got nothing to spend, that's when we hit recessions, okay? And so until then, but there's warning signs along the way. So I'm just putting that out there. So tomorrow's video, we'll go into detailed charts, okay? Detailed charts to set us up, plus earnings, and a lot of big expected moves, by the way, this week coming up. Huge expected moves for some of these stocks, which you might actually own. So anyway, hope you guys enjoy the rest of your Memorial Day weekend, and I will see you tomorrow. Please hit that like and subscribe on the way out. Bye-bye, guys.